Okay. Now, move forward toward the structure of financial market. After discussing the role and functions of the financial market, now we are going to discuss the structure of financial markets. That what is the structure? Look at here in the slide that this is the structure of financial markets. There are four types of structure here has been explained in this image. You can see that in the slide. So based on the instruments, based on the issuance of security, based on trading methods in secondary markets, and based on the maturity. So this is the basic structure foundation. These four are the pillars of the financial markets. Okay. Further, when we explain based on the instruments, how many instruments? It means that financial markets are two instruments: the debt markets, you can say, the equity markets. Based on the instruments, looking at the instruments, there are two markets: debt markets and equity markets. Okay, what are these markets? We explain in next slides. And based on the issues of security, because there are again there are two markets where securities are issues. One is primary market and other is secondary market. Looking at the based on trading methods in the secondary markets, so again, there are two types of markets: exchange markets and over-the-counter markets. And based on the maturity, there are two markets: money markets and capital markets. So this is the in short intro of the structure of the financial markets. You can say that this is the basic structure and in short way, a summary that this is the structure of financial market. Okay, move forward. No, as you know that here based on the instrument, there are two markets: debt markets and equity markets. Now move forward to explain that. Now based on the instrument, debt markets, when we say the debt markets, the first thing comes into our minds, that is bonds and mortgages. Actually, debt market is also known as short term. You can say that there are three terms, type of bonds and mortgages here in this market, like short term. The if the issued bonds, debt instruments, bonds, if their period is maturity period is less than 1 year, then we will say that this is short term bond, short term. And the long term, if maturity period is equal or greater than 10 years, then we say that the bonds there are the long term bonds. And medium term, if maturity period is in between, it means that 5 years, 7 years, 6 year. So we will say that this is the medium term, 10, 1 to 10, because equal to 10 then will become long term maturity. So this is actually debt based instruments. In this way, we will say that. And then equity market. Equity market is, you can say, the equity owners, equity ownership. Actually, it is related to the ownership. On the other hand, in debt instrument, there is no ownership. Here, the just borrowing of capital. When a company need a cash, it issue a bond into the market, and the companies buy the bonds and pay the money. So it is actually borrowing of capital. In debt markets, there is a borrowing of capital against what? That principal amount, the borrowed amount, will be returned to the companies, bondholders, plus also they will pay them fixed profit, fixed interest. That is also known as a riba in our Islamic financial system. So in debt markets, bondholders are actually creditor, and the company should go to credit markets to get loans, and they get their this loan from the credit markets, and they pay interest, and they pay interest. So this is known as debt instruments and debt markets, we can also call it. And the equity instrument, when we say equity instrument, there are two types: common stock and preferred stock, because both shows ownership. So actually, So equity instrument, common stock and preferred stock. What is the difference between again common stock and the preferred stock? Common stock, as it is, they are the shareholders actually. The preferred stock mean they will be preferred in distribution of profits. So if there will be actually, when company earn profit, first of all the profit is given to the profit stockholders. Whenever whenever on the other hand, the common shareholders, common stock holders, they get profit from a net income. If company faced loss, then common stockholders will get no profit. But in next month, when company will earn profit, then it will first of all pay profit to preferred stock for previous month. तो इसका मतलब ये हुआ कि जो प्रेफर्ड स्टॉक जिनके पास है, उनको पिछले महीने जिनका नुकसान हुआ था, उस नुकसान की बजाय भी आपको उनका नफा देना पड़ेगा पिछले महीने का, और बाकी कुछ अगर बचेगा तो फिर आप कॉमन स्टॉक वालों को देंगे, अदरवाइज कॉमन स्टॉक वालों के लिए कुछ भी नहीं बचेगा। तो दैट इज बिकॉज प्रेफर्ड स्टॉक वालों को पहले मुनाफा दिया जाता है, सो इस वजह से इनको प्रेफर्ड स्टॉक कहा जाता है। सो दीज टू आर नोन एज इक्विटी। व्हाई इट इज दीज टू आर नोन एज इक्विटी? क्योंकि ये दोनों के दोनों यहाँ पर ओनर होते हैं, मालिक होते हैं, जबकि यहां पर मालिक नहीं होते डेट मार्केट के अंदर। सो अच्छा, इसके अंदर कोई मैच्योरिटी नहीं होती, whereas there is a maturity into the debt instrument, but in equity instrument there is a no maturity, because if an entity wants to keep ownership share into a company, it is their discretion. They can keep the ownership for the period what they want the period. तो जितनी मुद्दत के लिए वो अपनी ओनरशिप रखना चाहें वो अपनी ओनरशिप रख सकते हैं। So buying, that is why it is known as that equity instrument. Actually, what is equity instrument? This is the buying capital. When a company need cash, they float its share into the stock market and people buy the share. When they buy the share, they pay capital to the company. So it means that companies are buying capital against their shares. So this is buying capital, it is not borrowing capital. So in the here there is a no principal plus interest, actually here sharing of profit and gains. Though Islamic financial system consider it interest because there is a no sharing of risk. There is riba, fixed interest, like like the preferred stock in term. But common stock they face loss. If there will be loss, then the common shareholders they face loss. They do not take profit. But preferred stockholder, if company face loss, company is bound to pay profit to preferred stockholder. So that is why there is no space for preferred stock in Islamic financial or Islamic economic system. But common stock, there is a common stock are allowed in Islamic financial system if company is running its business in halal side. Okay. The next one is company should go to the capital market to issue its share as an equity instrument. Yes, for the equity instrument, they in which market they will go? They will go to the capital market to issue their equity instruments.